Hi student, today we are going to discuss about the preparation of cost sheet. As you know, what is cost sheet? Cost sheet is a document when we prepare either by issuing different types of or recording various cost under this cost sheet. It is a statement where the cost sheet is a statement that shows the various component of total cost for a product and shows previous data for comparison. So in this part we discussed one numerical problem, how to prepare our cost sheet. When we go through the calculating cost sheet or the selling price of any commodity, any product, it is necessary to identify their different types of expenses as well as costs. So according to this, we are going to prepare these headings with the help of prime cost, factory cost, selling, that is the cost of production, and third last point, that is the total cost. And after that we will it will easy to find out the profit and as well as find out the selling price. So we will start with this question. The expenditure incurred in the manufacturing and selling of product X for 3 months ended on 31st 3 2019. Here is some headings are mentioned as an expenses or the cost related with the production. So first, that is the direct material cost, engineer fees, power and fuel, and amounts are present in this question. So wages payable, office salary, trade discount, chargeable expenses, haulage, general on cost, catalog expenses, process and operating wages, timekeeping expenses, electricity charges, donation for Cargill fund, tendering expenses, commission on sale, tons manufactured and sold. After that, there are some points we have to consider while calculating our cost sheet. So in this part, prepare a cost sheet of modern manufacturing malad showing the cost for each element, the cost, total cost per ton, and the profit if the sales are made at ₹100 per ton. So, first point, that is the calculate total tons are given in your question, that is the tons manufactured and sold 1000 tons, and per ton amounts are present, that is 100 per ton. So, total sales in amount is equal to 1000 tons into rupees 100 per ton gives you the total sale of rupees 1 lakh. Now, before recording these headings into cost sheet, you have to allocate these headings into various points or under the various headings. First heading, that is the prime cost. So P1 we are recording or using P1 for the direct material, that is the prime cost 1 heading or contain of prime cost 1. P2 for the direct wages, P3 for the direct expenses. So in this question, first we have to allocate all the headings under the various cost. So first direct material cost goes under the P1. Prime cost 1, that is the direct material. Engineer's fee is your direct expenses. It is recorded under the P3. Direct expenses recorded as P3. Power and fuel. Power and fuel is a part of your factory expenses, so recorded under the factory overheads. Next, wages payable. It is your recorded under the P2, that is the direct wages. Though it is payable, it is also recorded under the heading of wages or direct labor. So P2. Next, office salary. The word indicates recorded under the office. Whatever the salary paid to office staff recorded under the office or administrative overheads. Trade discount is a discount and it is in financial nature expenses. So the trade discount is not recorded in your cost sheet. So we are just right there, not recorded. So then it is not recorded. Not recorded anywhere. So chargeable expenses, next point. Chargeable expenses means it is your direct expenses and direct expenses indicate with the P3. So it is also recorded under the P3. That is direct expenses. Haulage it is a type of freight and it is recorded under the factory headings. General on cost are the headings which is recorded on the office expenses or under the heading of office expenses or office overheads. So right here only office. Catalog expenses, it is related with the sales promotion expenses, and that's why it is a part of your selling and distribution. We are just right here S, that is for selling, and D, that is for distribution, S and D. Next, process and operating wages. What is the process and operating wages? Process and operating wages are the direct wages. Process wages, operating wages are your direct wages, and it is directly related with your prime cost 2, or it is a component of prime cost. So record here P2. Next, timekeeping expenses. Timekeeping expenses are always related with the factory workers, and it is recorded under the heading of factory. Electricity charges, it is not mentioned for which purpose electricity charges are given. So in this part, electricity charges are recorded on the office expenses. Donation for Kargil, donation, and whatever the headings are there, it is donation is for financial nature. So sorry, it is the heading under the recorded under the financial nature. So it is not recorded anywhere. Tendering expenses, it is the selling and distribution expenses for the sale and promotion. So right there S&D, selling and distribution. Commission on sale, it is also a part of selling and distribution for the sale promotion expenses. Selling and distribution and sales, it is not recorded now, but we are consider at the end of your calculation. So the first point, you have to identify and record your all headings in your cost sheet. So your cost sheet start with the in the books of whatever the name of company. In this question, Modern Manufacturer Malad. Cost sheet for the product, it is compulsory to record here. Cost sheet for the product for the month or the period which is for it mentioned. Then on the right side of cost sheet, unit produced, it is if it is mentioned it should be written. Unit sold, if it is mentioned it should be written. So the first part for this heading, that is the recording of first prime cost 1. So the first heading recorded, that is the P1, direct material. Direct material cost. What is the amount of direct material cost? That is the 30,000. 30,000. And per ton value. In this question, we have to calculate per ton value. So per ton value and amount are calculated. Per ton value of the material cost calculated by 30,000, that is the total amount. 30,000 divided by 1,000 tons, which is mentioned in your question. So answer will be 30. Rupees 30 per ton. Next heading, add direct labor. Sorry. Direct labor. Direct labor. Under this heading, there are two main points are there. First, direct productive wages, or you can say wages payable, as well as process and operating wages. Process and operating wages. First heading. Next, wages payable, process and operating wages, rupees 13,000, and wages payable, that is the second point, wages payable, amount 2,000. Next point of prime cost, add direct expenses. So what are the direct expenses? There are three components of prime cost: direct material, direct labor, and direct expenses. Direct expenses start with the sorry, this is the direct expenses, chargeable expenses. Chargeable expenses amounted to rupees 4,000. Next direct expenses are engineer's fee, that is where we posted as a P3, engineer's fee rupees 1,000. Now the per unit value of each heading, 13,000 divided by 1,000 tons, it is 13 rupees. 2,000 divided by 1, it is 2 rupees. But you can say direct labor will be 15 rupees, total 15 rupees. So no, not necessary to write every headings. Next, direct expenses rupees 5 per ton, 4,000 plus 1,000, 5,000. 5,000 divided by 1,000, 5 rupees per ton. Now calculate all the total of these these three headings: direct material, direct labor, that is direct wages and process operating wages, and direct expenses, gives you the first heading, that is your prime cost. Total of these three headings are rupees 50,000. 50 rupees per ton. 50,000 divided by 1,000. 1,000 ton. So this is your first heading, that is called prime cost. Heading first, prime cost. Next heading, add factory expenses. Factory expenses. So wherever we write factory, we are continue with the wording. First heading, power and fuel. Next heading, factory expenses, haulage. Next, factory expenses, timekeeping expenses. There are only three headings for factory headings. Calculate it and count it. There will be total 10,000. Factory expenses of rupees 10,000. 12,000 it's. Total per ton rupees 12 per ton. 12,000 divided by 1,000 tons. Per ton value rupees 12 per ton. Next, add 50,000, that is your prime cost, and factory expenses. Answer will be whatever the answer is, factory cost. Factory cost 50,000 plus 12,000, 62,000. Factory cost. And per unit, that is 60 rupees, 62 rupees per ton.